David, there's one thing everybody's been talking about for the last few hours, and that's the approval of the spot Bitcoin ETFs.
Yeah, the game is afoot, I think. Sherlock Holmes would say, right?
Yeah.
So we thought we'd actually go through exactly what happened, what the consequences are with Tim Massad. He's Kennedy School Fellow and former chair of the CFTC. Tim, thanks so much for being back with us. We've talked about this as it was pending. And what I was just saying to Romaine, actually, is of all the approvals I've seen out of government, this is about the most reluctant one I've ever seen coming out of the SEC. It was a 3-2 vote, and boy, we had the chair saying they're not so sure about it. At the same time, the traders are going, and as of 1 o'clock, we were over $3 billion in trades. Why is the SEC so reluctant?
Well, I think, Chair Gensler never wanted to do this, but I don't think he really had another path forward, right? They lost the court case with Grayscale. And so I think he realized better to approve them than to try to deny them and basically get forced by a court to do this. So, he sided with the Republican commissioners to approve them. And then, of course, you had the Democrats, the two other Democrats voting no. I think the concerns of Chair Gensler and the Democrats are the same, that the level of investor protection in the underlying spot market is still very low. It's not a regulated market. This might help improve the standards. There are ways you can make that argument, but not directly so. On the other hand, I think this is going to bring in a lot of new investors into the market, particularly because I think traditional investment advisors are going to feel more comfortable now recommending Bitcoin ETPs, which is really technically what they are, exchange-traded products, to their clients who want Bitcoin exposure.
So the spot market may not be regulated itself, but one of the things the SEC relied upon was the CME and their regulation of the futures market, and saying that they actually operate in parallel. Does that give you a little more solace?
Well, not a whole lot. I mean, not that I don't respect CME, but CME does not really have any supervisory authority over the spot market. So where they ended up in the approval was to say, well, look, if you're trying to manipulate the Bitcoin spot market, that's likely to show up in the Bitcoin futures market, and therefore we'll see it. But then the question is, but what are you going to do about it? At the same time, I would say that, look, the fact that big institutions like BlackRock, like Fidelity, now have an interest in that helps. And so I'm hoping that at least over the long term, they can be forces for bringing better regulation to this market. So that's my hope in terms of the silver lining here.
What does that process look like, Tim? And I really mean that from the lens of the investor, who at least to a certain extent is kind of exposed for right now. And if you really sort of read in between the lines of the language of that statement that Gary Gensler put out, he kind of made it clear, you're on your own.
Yes, that's right, Romaine. I mean, look, again, the underlying spot market isn't subject to regulation. And there have been arguments that there's a much higher risk of fraud and manipulation, of wash trading. And all you have to do is read Commissioner Crenshaw's dissent on this to see some of those facts. Now, again, the basis for approving it is that, well, if there is manipulation in that spot market, we'll see it in the futures market, and CME will be aware of that, but not clear what they can do. At the same time, these are now registered products under the 33 and 34 Act, so, that's a good thing.
That's a good thing. I mean, registered ETPs, we should point out, just to be very clear about this. But it's already opened the door to a lot of other areas of the crypto sphere, if you will, that are now seeking to sort of find their own place in this market and maybe even more clarity on regulation. We had a filing, a confidential filing to the SEC from a company called Circle Internet, which of course runs a stablecoin. And it's been made very clear that this isn't just about them coming public to the market, but it's also kind of forcing the SEC's hands in terms of how or if they should be regulating stablecoins as well.
Well, I'm of the view that they should not be regulating stablecoins. Now, they did recently win the case against Terraform Labs, but the issue there, and that was with respect to Luna and Terra, but the issue there was the judge said that, look, it was the coupling of Terra, the stablecoin, with this Anchor protocol, where people could deposit their stablecoin and get a 20% return. that made it an investment contract. I think if you're still talking about a stablecoin that does not pay interest, that is not something that should be under the SEC. I still think of that as a bank product, bank-like product, that is. It's a payment mechanism, and I'd still very much like to see us create a regulatory framework for that. It's not clear that they can have a huge application in payments, but we should find out.
So does that mean that this might fall under the umbrella of the Fed, should we actually get to that point? Well,
probably not the Fed. I don't think they want to touch it. I would say more likely the OCC, the Office of the Comptroller of the Currency. And there is legislation, as you know, pending in Congress. The House Financial Services Committee passed a bill. Not likely that we're going to see that make it out of Congress to Biden's desk before the election. But who knows what might happen after the election. But I think we do need to create that framework. Other countries, a number of other countries are creating that framework. I think it's good both to address the risks of stablecoins, because we don't have a framework today that really regulates them except under state laws. And it also potentially allows us to realize the opportunities that stablecoins may pose. But you've got, Japan, Europe, Singapore, the UK, the UAE, all moving forward to create these frameworks for stablecoins.
So, Tim, I think you're making a terribly important point. It's, of course, not just a question of what the regulation is, but who gets to decide. I mean, you say how you think it should work. You're a smart man. You know this better than I do. I'm willing to defer to you, but you don't have the authority to do that. Is it a bit of an embarrassment that we basically have the CFTC, we got the SEC, we've got banking regulation? When is Congress actually going to step in and do this?
Well, that's the $61,000 question, David. I mean, I've been talking about this for almost 10 years now. I hope they would step in by now. There's some greater momentum, but frankly, still, we've got a lot of diversity in viewpoints in Congress. You've got some people who are just very, very skeptical of this whole sector, and they feel that any legislation that addresses the regulatory framework may just legitimize it more. And so they don't want to do that. And then, of course, you've got other people who think there's great innovative potential. They want to make sure we don't over-regulate. So, you've got to find a middle ground there. Again, I don't think we're going to see legislation prior to the election pass, but maybe after that.